XAUUSD, popularly known as the gold spot. And on the gold spot, I will say this is one of the most profitable assets on our watch list for this week, as we were able to scoop in some significant amount of profit on this particular asset. And one of the turning point for the week was following the US CPI data that came in unexpectedly high on Tuesday, resulting in a positive traction in favor of the US dollar. And this gave us 3 positions triggered. Remember, we did have a sell stop order below the $2025 area. We also added one more at the breakdown of the 2022, and finally we added another one at below the $2013 area, running all the way into the $1,985 level, to give us a minimum of 700 pips in profit on this particular asset. And for those of us who capitalize on that opportunity, well done and kudos to you for being on standby. Well, after the strong bearish momentum to the downside, we begin to notice that price action was confined within a range for a while, remember? And we talked about this yesterday. And while we caught price within a range here, we saw a couple of factors from technical standpoint that supported the idea of a bullish momentum. One of them is the ascending trend line we did identify here after connecting the series of higher lows, giving us signs that buyers are gradually gaining momentum within this whole consolidation phase. Then the other one is the potential inverse head and shoulder pattern, though it's not a theoretical one, but it looks like one, like this left shoulder, where this one is the head, and then we have the right shoulder here, as price was unable to get to as low as the left shoulder. Then we had the neckline of this pattern somewhere around the resistance line of the range at the $1,995 area. And you will remember that we said we will be buying the breakout of this particular structure. And in fact, a couple of hours into the New York session, we saw price break out of that level. And if you in any way missed out on the first one, price was kind enough to come back, retest the structure to give us another wave of bullish momentum. And if you capitalize on that opportunity, well done to you, as currently you should be having a minimum of 115 pips in profit on this particular asset. And it is high time you want to be moving your stop losses right now to secure this current buy position as we approach the PPI data and of course the CSI data coming up later today. So anywhere between the $2,002 and $2,000 area seems most appropriate to move all stop losses to, while we give enough breathing space for price action to move around. Now, based on what is going on right now and from a technical standpoint, the current bullish trend seems to be holding strong, with price action maintaining levels above the ascending trend line we identified yesterday. However, the potential for further upward movement on this asset is uncertain due to the US dollar's recent recovery, alongside a slight uptick in US Treasury bond yields and a cautiously optimistic market sentiment. At this juncture, like I said earlier, it is advisable to safeguard all buy position at this stage. Now, though during the Asian session, we saw this whole consolidation phase, and in fact, it's beginning to give me signs that price may continue to the upside. So if we look at this consolidation phase closely, you'll see an ascending triangle, which technically is considered to be an uptrend continuation pattern, where the breakout of the resistance line of the pattern at the $2005.50 level will be all we need to join an uptrend continuation. And because of this pattern here, I already had a buy stop order which has been triggered right now. And for those of us who have been with me for a while now, I hope you are able to identify this. If you did, well done and kudos to you for capitalizing on that opportunity. Now, as it is right now, following a disappointing US retail sales report from yesterday, there are speculations that the Fed might consider rate cuts soon. Nevertheless, the robust US consumer inflation data and hawkish comment from Atlanta Fed President yesterday, Raphael Bostic, suggest that the Fed could delay any policy changes until their June meeting. Now, despite this mixed reaction, concerns over rising tensions in the Middle East could be what the gold would hold on to support the XAUUSD in today, Monday, Tuesday, Wednesday of next week. So at this juncture, market participants will be closely monitoring the US economic data release for potential market moving development. So it's important, I will reiterate here, secure your existing buy positions while we remain vigilant for new trading opportunities. Now, for those of us who missed out on this breakout of the $2,005 area, that is this level right here, well, let's see if the market will be kind to give us a second chance to join this uptrend move. And what we will be looking out for is a retest of structure to join that uptrend continuation. So if that happens, well, we have a second chance to join that uptrend move. Now, if price continues to climb and find new highs, remember that considering this impulsive move that we saw here on Tuesday, this old bullish momentum may be a retracement move where we do not know how far it's going to go before the next wave of bearish momentum will happen. So we have levels here that we can use to monitor them. We have the $2013 area, we have the 2022, we have the 2025, and of course we have the $2027 area, all of which, as soon as price gets close to the structure, we move all our stop losses on our buy position, secure it, and wait to see how the market will react with these levels. If it breaks out the level, then we look out for more opportunities above the structure to add more positions to our existing trade. But if price gets into this level and we begin to see selling pressure below the structure, it could incite a downtrend move. So if we see selling pressure at any of this level, it could be here, it could be here, it could be here. Please, once we start seeing selling pressure, let's see if we can identify a reversal pattern like a double top structure, head and shoulder pattern, or rising wedge. If we can, mark out the neckline of that reversal pattern and then sell the breakdown of the neckline. So that is how we are going to be managing this uptrend scenario here. Now, what happens if price does not get close to the 2013 at all and instead continues to drop to the downside? Well, if that is going to be the case, then this ascending trend line will be guiding our decisions going forward. Now, if price breaches this ascending trend line and breaks down, retest it, then we'll have no other choice than to get ready to sell this particular asset. So I encourage us all to mark out these levels and trend lines on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is my simple view on the XAUUSD. If you have any questions, feel free to let me know in the comment section.